Assalamualaikum warahmatullahi wabarakatuh. I wish to Madam Farini. My name is Ammar bin Rizal.
I am Isabil and Zaim.
My name is Muhammad bin Azizan.
My name is Muhammad Bazil bin Azam.
My name is Zaim bin Berhad.
We're going to present about financial ratio for FGV Holdings Berhad and Batu Kawan Berhad. Thank you. FGV operates in 9 countries across Asia, North America and Europe, and is focused on the 3 main sectors: plantation, sugar and logistics. FGV is the one of the world's largest plantations companies and a crude palm oil producer (CPO). Incorporated in 2007 as a private limited company, FGV initially operated as the commercial arm of Federal Land Development Authority, which is FELDA, prior to its listing in the main market of Bursa Malaysia. FGV officially changed its name to FGV Holdings Berhad in June 2018, and in 2019, FGV market capitalization is at 4.41 billion, backed with more than 54,000 of workforce and 50 years of industry expertise. These companies are committed to continuously drive a sustainable and profitable business while delivering value to the stakeholders.
Kawan Berhad (BKB) was incorporated in 1965 and commenced operation as a plantation company when it took over the assets and liabilities of its previous company, Batu Kawan Rubber and Coconut Plantation Limited, in 1971 under a scheme of reconstruction. From its core plantation business, the company has over the years diversified into subsidiaries and investment in companies that manufacture basic chemicals, bleaching earths, latex examination gloves, and rubber wood pocket, and into stockbroking. Except for its basic chemicals and plantation business, the company has since disposed and exited all these subsidiaries and investment. In 1992, the company sold all its plantation assets to Kuala Lumpur Kawan Berhad (KLK) in exchange for shares. KLK is the company's largest investment, in which its current owns 47% equity stake. BKB also listed as high-performing blue chip in Asia Pacific.
Liquidity ratio measures the liquidity of the firm liquid resource to pay current and maturing liability on time. The higher ratio, the higher the ability to pay. This is current ratio. The current ratio measures whether a company has the ability to use the current asset to pay a short-term obligation. The highest current ratio for Batu Kawan Berhad is on 2018, which is 2.4 times, followed by 2.33 times on 2017, 2.229 times on 2014, and 2.118 on 2015, and the lowest is 2 times is on 2015. It shows that Batu Kawan Berhad on 2018 has the ability to pay a short-term obligation on time compared to previous year. So, for Felda Global Ventures, the highest current ratio for Felda Global Venture is on 2014, which is 1.65 times on, and followed by 1.39 times on 2015, 1.12 times on 2017, and 1.031 times on 2018, and the lowest is 0.562 times on 2016. It shows that Felda Global Venture on 2014 has the ability to pay its short-term obligations compared than previous year. I think that Batu Kawan Berhad has a better ability than Felda Global Venture based on 5-year performance.
The quick ratio is to measure whether a company has the ability to use its current asset without using the inventories and prepayment to pay its short-term obligation. Based on 5 years, Batu Kawan Berhad in the year 2017 has the highest quick ratio, which 1.74 times, and the second highest is 1.6 times on 2018, and followed by 1.59 times on 2016. The lower is 1.37 times on the year 2015, and the lowest quick ratio is 1.13 times on 2015. It shows that Batu Kawan Berhad on the year 2017 has the best ability to pay its short-term obligation without rely on the inventories and prepayment compared than other years. Okay, based on 5 years, Felda Global Venture on the year 2015 has the highest quick ratio, which is 1.23 times, and the second highest is 0.98 times on 2015, and followed by 0.736 times on 2017. The lower is 0.61 times on the year 2018, and the lowest quick ratio is 0.31 times on 2016. It shows that Felda Global Venture on the year 2014 has the best ability to pay its short-term obligation without relying on the inventories and prepayment compared than other years.
Moving on the net working capital. So this is the difference between the company's current asset and its current liabilities. So the highest net working capital we can see on the orange color, which is for the Batu Kawan Berhad, is 4.26 billion, which is the highest on the year of 2017. The second highest is RM 3.89 billion on the 2018, and followed by the 3.87 billion on 2016. So the lower net working capital is on 2015, which RM 3.7 billion, and the lowest net working capital is 2.9 billion on 2014. So the performance of net working capital for Batu Kawan Berhad is on the year of 2017 shows the company has sufficient funds to meet its current financial obligation and invest in other activities. Hence, apart from that, we can see that Batu Kawan has an uptrend level for the net working capital, which is good for the stakeholders and everyone investing on this. For the FGV Holdings Berhad, we can see the difference pattern of the trend for the net working capital. As it started from the 2.8 billion from 2014, and it's going upward until 2016, which is the highest, 5.5 billion, but it shows a downtrend, and which is the losses for the stakeholders and the company until just 6 millions of net working capital. And in 2018, it recorded the lowest net working capital, which is only 1 million for the shareholders.
Okay, next is leverage ratio. What is leverage ratio? Leverage ratio is a higher risk associated with higher return. With proper use of debt or leverage, the firm will be able to get more profit as the cost of debt is cheaper, interest is tax deductible, and the firm finance its activities is with debt equity, and any profit will be appropriated among relatively few stakeholders. The first leverage ratio is the debt ratio. The debt ratio is the solvency ratio that measures a firm's total liabilities as a percentage of its total asset. For Batu Kawan Berhad, the lowest ratio for these 5 years are on the 2014 for 0.11 times. On the year 2016 and 2017 has the same debt ratio, which is 0.12 times. The highest debt ratio goes to the year 2015 and 18, which is 0.13 times. On the year 2014, Batu Kawan Berhad showed that they had lowest amount of debt to their asset, which is good, and therefore they rely on less creditor to operate their business. For the debt ratio for Felda Global Ventures, the lowest ratio for these 5 years are on the 2014 for 0.45 times. The second lowest debt ratio is on 2015, only had 0.47 times. On the year 2016 and 17 has the same debt ratio, which is 0.48 times. The highest debt ratio is 0.52 on the year 2018. On the year 2014, Felda Global Ventures showed that they had lowest amount of debt to their asset, which is good, and therefore they rely on less creditor to operate their business.
So let's talk about debt to equity ratio. The debt to equity ratio is calculated by dividing company total liability by its shareholder equity. The ratio is used to measure the ability of shareholder equity to cover all outstanding debt. So Batu Kawan Berhad on 2014 has the lowest debt to equity ratio, which is 0.70 times, followed by 0.2 times on 2016 and 2017. So the fourth debt to equity ratio is 0.22 times on 2015, and the highest debt to equity ratio is 0.23 times on 2018. which is less desirable, which indicates greater obvious debt and the shareholder equity to cover its financing debt. So let's talk about Felda Global Venture debt to equity ratio. Their lowest debt to equity ratio is 0.52 times on 2018, followed by 1.06 times on 2014 and followed by 1.12 times on 2015. The fourth debt to equity ratio is 1.22 times on 2016 and the highest debt to equity ratio is 1.26 times on 2017, which is less desirable because it indicates greater use of debt and shareholder equity to cover financing debt.
Okay, activity ratios. It indicates how efficient the manager uses the available resources in order to generate sales and its contribution towards the achievement of the firm's goal to maximize shareholders' value. This ratios looks at the manager's effectiveness in managing the firm's assets and efficiency in handling the firm's operations. Okay. For inventory turnover, the inventory turnover ratio provides an indication on whether a company has an excessive or inadequate amount of product in inventory. The highest inventory turnover for Felda Global Venture is 7.4 times on 2014 and followed by 7.16 times on 2016. The third highest is 7.04 times on 2017. The lower inventory turnover for Felda Global Venture is 6.57 times on 2015 and the lowest inventory turnover is 5.86 times on 2018. Highest inventory turnover for Felda Global Venture on 2014 reflects that the company has efficient inventory management and it is positive signs that the inventory contributes high profit to the company. For Batu Kawan inventory turnover, the highest inventory turnover for Batu Kawan Berhad is 10.16 times on 2017 and followed by 9.53 times on 2016. The third highest is 7.69 times on 2018. The lower inventory turnover for Batu Kawan Berhad is 7.21 times on 2015 and the lowest inventory turnover is 6.22 times on 2014. The highest inventory turnover for Batu Kawan Berhad on 2017 reflects that the company has efficient inventory management and it is positive signs that the inventory contributes high profit to the company.
Alright, this part is our show about the total asset turnover. What is total asset turnover? Alright, the total asset turnover ratio can be used as an indicator of the efficiency with which a company is using its asset to generate revenue. The asset turnover ratio measures the value of a company's sales or revenue relative to the value of its asset. Here is for the Batu Kawan Berhad. Based on 5 years analysis, Batu Kawan Berhad on the 2014 has the highest asset turnover ratio and second highest total asset turnover ratio is 0.14 on 2017. For the 2018 and 2016 has the same total asset turnover ratio with is 0.12 and the lowest total asset turnover is 0.11 on the year 2015. Alright, for the FGV, as we can see here, the highest is in 2014, which is 0.106, and then for the lowest one is in 2018, which is 0.073. Alright, this part is I will present about gross profit margin. What is gross profit margin? Gross profit margin ratio provide on indication on how well a company is setting its price and controlling its production cost. As we can see here, the orange one is Batu Kawan Berhad. In 2014 is the highest one for the Batu Kawan Berhad, which is 19.54, and it started to decline from 2015, 16, and become intense, a little bit intense from 2016, 17, and decline a little bit, 12.6%. That is for the Batu Kawan Berhad. For the FGB Holding Berhad, the highest one is in 2014, which is 14.44%. Is declined to 12.00 in 2014. It declined up, and lastly in 2018 it has 10.20%. Alright, this part I will present about the operating profit margin. Operating profit margin is profitability or performance ratio used to calculate the percentage of profit a company produces before interest and taxes. Based on 5 years analysis, as we can see here, the blue one is the FGB Holding Berhad. It started at 8.50% in 2014, and it declined negative 9.01 in 2015. It started to increase again 2016, which is 7.03%. And for 2018, it has the same value as 2014, which is 8.50%. So that is for the FGB Holding Berhad. Next is for the Batu Kawan Berhad. In 2014, Batu Kawan Berhad has 7.35%. It decreased a little bit in 2015, which is 7.06%, and it up a little bit, decreased, and lastly in 2018 it has a 6.52%. Alright, this part is I will present about the net profit margin. What is net profit margin? Net profit margin ratio assists a company in determining whether the selling prices are too low or if expenses are too high, or both. Based on Batu Kawan Berhad, it is started 9.62% in 2014, and it declines in 2015, increase in 2016, and it becomes the lowest in 2018, which is 4.88%. That's all that is for the Batu Kawan Berhad. And the next one is for FGB Holding Berhad. As we can see here, it is started 3.50% in 2014. It is declined from 2014 to 2015, and it declined again 2016. It is a little bit increase in 2017, which is 1.20%. And for the 2018, it is decreased to negative 0.50%.
I will explain about return on equity. What is return on equity? It is to measure on how the level of returns that shareholders are getting for every ringgit of funds that they have invested in the firm. Based on 5 years evaluation, Batu Kawan had the highest return on equity was 13.60% on the year 2016, and followed by 11.20% on 2014, and followed by 8.80% on 2017, 8.60% on 2015. The lowest return on equity for Batu Kawan Berhad is 7.10 on 2018. Okay, next I will explain about return on equity for FGV Holdings Berhad. Based on 5 years evaluation, the highest return on equity was 8.40% on the year 2014 and followed by 4.70% on 2015 and followed by 3.70% on 2017, 2.50% on 2018. The lowest return on equity for Felda Global Venture is 1.15% on 2016. High return on equity on the year 2014 shows that higher return on shareholder equity.
Return on asset ratio measure how well the company is using the assets to generate the after-tax profits. We can see on the orange line, which is the Batu Kawan Berhad, it started with 3.70% for 2014, and the highest of ratio in return on asset is on 2016, which is 4.20%. It showed the quite stable but a declining trend for return on asset for Batu Kawan. As compared to FGV Holdings Berhad, it started with 2.60% from 2014 and slightly decreased to 2016, which have 0.32%, which is the lowest return on assets regarding this company, FGV Holdings Berhad. But it shows uptrend or drastically increasing in 2018, which is 6.10% of return on assets, and the highest ratio for return on assets for the FGV Holdings Berhad, it shows that it generated the highest profits in 2000. Market ratio analysis is a very important ratio analysis in investor view because they are used in the stock valuation process in deciding the security for investment portfolio. The result of the firm's operations are reflected based on this ratio. As an investor point of view, we decided to invest in Batu Kawan Berhad compared to Felda Global Ventures, FGV Holdings Berhad, because it shows an advantages and good news regarding the market ratio. We will show you about the market ratio analysis for Batu.
Okay, let's talk about earning per share. Earning per share measure the amount of earning available to common stocks per shares of common stock held. So based on the graph in this slide, we can see that Batu Kawan Berhad managed to get the highest 203.4 cents for 2016, followed by 145.2 cents for 2015, and then 1.269 for 2018, and the fourth one is 119 cents for 2017, and the lowest one is 116.2014. Okay, dividend per share. Dividend per share shows the amount of current earning paid out or on per share basis to common stockholder. So based on Batu Kawan Berhad performance, they had the highest on 2015 and 2018, which is 60 dividend per share, and then followed by 2014 and 2016, which is 55, and the last one is on 2017 is 50 only. Okay, so let's talk about dividend yield. For Batu Kawan Berhad, they had the highest dividend yield on 2014, which is 3.2%, and followed by 2015 and 2018, which is 3.1, and then the last one is they have lowest dividend yield, which is 3% on 2016 and 2017. Price earning ratio. Price earning ratio shows the relationship between the market price of the company shares and its earning per share. It indicates the investor preference of the company shares with respect to the earning available. So based on Batu Kawan Berhad performance, they have the highest price earning ratio on 2018, which is 15.1 times, followed by 2014 is 14.7 times, and then the third one is 2017, 14.1 time on, and the next one is 13.2 on 2015, and the last one is 8.9 time on 2016.
We have learned so much through the financial ratio analysis, and we want to thank you, Madam Farini binti Morni, for the knowledge that have been learned and teach from you. So thank you so much. Assalamualaikum warahmatullahi wabarakatuh.